The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos, and these are your headlines. US President Donald Trump accuses Iran of dishonor against their fragile ceasefire, with the Strait of Hormuz still tightly throttled, whilst Israel says it would hold peace talks with Lebanon, but still continues its attacks on Hezbollah.
Crude prices hovering just below the $100 mark, even as Saudi Arabia reports that Iran's strikes this week on its Red Sea pipeline will effectively wipe out 700,000 barrels a day off the market.
European and US equity markets set to close the week well into the green as investors hold on to hope for the ceasefire. On Wall Street, the S&P 500 is on pace for its best weekly performance since November.
A fragile ceasefire between the US and Iran appears to be under further strain ahead of key talks this weekend in Pakistan, with President Trump warning Tehran, quote, better stop now if it's charging oil tankers to go through the Strait of Hormuz. Meanwhile, the Israeli Prime Minister Benjamin Netanyahu announced direct negotiations will be held with Lebanon as soon as possible, but has vowed to continue strikes. Iranian officials have repeatedly said the ceasefire includes Lebanon, calling Israeli strikes a violation of the truce. Attention is on this weekend's negotiations in Islamabad. According to the Wall Street Journal, Iran's delegation, led by the country's foreign minister and parliament speaker, have arrived in Pakistan ahead of the talks. However, two Iranian outlets have reported denials. Well, tying this all together, as ever, is Dan, who joins us from the Middle East now. Dan, just tell us about the key aspects. There's so much going on multiple fronts.
Steve, good morning to you. Well, Islamabad is under high security lockdown now, and this week it's going to host what will be some of the most consequential diplomatic talks in years, which is, of course, these direct face-to-face negotiations between the United States and Iran. And if the talks go ahead, that is, if these talks go ahead, then Vice President J.D. Vance will become the first sitting U.S. Vice President to visit Pakistan in 15 years. The last was, of course, Joe Biden, who came as Vice President back in January 2011. And an interesting moment for Pakistan here as well, which has really positioned itself as the architect of this ceasefire and is now staking its international reputation on making these talks work. Of course, Pakistan has its own reasons to want this to succeed as well. The war has really battered Pakistan's economy. It's triggered an energy crisis there, and it's caused severe oil shortages on the ground as well. But to your point, coming into this, the gaps heading into tomorrow are enormous. These talks are going to center on a ceasefire framework covering the reopening of the Strait of Hormuz, sanctions relief, and Iran's nuclear program as well. But Iran is arriving demanding full war reparations and the lifting of all sanctions. President Trump has already said that he has dismissed Tehran's 10-point proposal. And then in particular on the Strait of Hormuz, because this is what is most significant for investors, the ADNOC chief executive Sultan Al Jaber said in the last few hours that the Strait of Hormuz remains, in his words, not open. President Trump also calling Iran's management of the waterway dishonorable and also accusing Tehran of breaching the agreement as well. Iran says the strait is under new management. So the bottom line here is that the central condition of this ceasefire, which is free passage through Hormuz, has not been met yet. And then, of course, there is the Lebanon conundrum as well. These strikes have created a huge diplomatic pressure point. Of course, more than 300 people were killed in Wednesday's bombardment alone. Prime Minister Netanyahu has instructed his cabinet to begin direct negotiations with Lebanon, focused on the disarmament of Hezbollah, while also simultaneously saying there is no ceasefire in Lebanon and that these strikes will continue. Here's the Prime Minister speaking earlier.
Following repeated appeals by the Lebanese government to open negotiations with us for peace, I instructed last night in the cabinet to begin direct negotiations with Lebanon. in order to achieve two objectives, one to disarm Hezbollah, and the second, a historic sustainable peace agreement between Israel and Lebanon.
Prime Minister Benjamin Netanyahu there. And of course, Iran called all of Lebanon's Israel strikes inside Lebanon a violation of the ceasefire framework. The White House and Israel, of course, disagree. So coming into the weekend, you really do get the sense that these talks are perhaps the last clear off-ramp before this ceasefire potentially collapses. The question is whether both sides actually want to take it, and all eyes are going to be on Islamabad over the next 12 to 24 hours.
Thank you very much for spelling out all the details for us and the precursor to the talks. And markets, of course, have been fragile still. We have not reclaimed all of the territory that we've lost as the war kicked off. Some markets have done a fair attempt to reclaim some territory, but ultimately are just back towards some of the mid-conflict levels that we've witnessed on markets. When it comes to the US, this was the state of play, 8/10 plus on the Nasdaq, one of the stronger leaders, technology clearly leading the charge back to the upside. Over the course of the week, we've seen the likes of the Dow and the S&P 500 claim about 3.6%. So very big moves on markets, even more on the Nasdaq, more than 4% for the trading week. In terms of the Asian markets, now I mentioned some of the big ones in recent weeks have been trading very heavily on the conflict that's been Japan and South Korea. Those markets, again, back to levels mid-conflict, very strong to the upside this week, and that continues in that Friday session. 1.5% on the South Korean market, 1.8% on the Japanese stock market, and gains across for Chinese stocks too. A little bit less than that territory, but marking high by about 0.8%. To European markets, these have been some of the ones that have reclaimed more territory than others. The FTSE in particular, as it moves back towards higher territory, but again, not back towards the February peak conflict levels. The stocks, the 50 futures rather, 0.6% to the upside. DAX futures, 0.6, and a little bit less on FTSE futures. And when it comes to the US markets, what we're anticipating for the Friday session, after what has already been a big moving week to the upside, you can see a very tentative. We're looking at giving back a little bit of territory on the Dow, but fairly flat for the S&P and for the Nasdaq. Now, in terms of some of the drivers, it is about the macro, and we're looking at US inflation data later today. Headline CPI is seen rising at its fastest pace since May 2024, with economists forecasting 3.3% inflation on the year. The data is expected to underscore the challenge facing the Fed, with today's core PCE inflation reading for February's meeting expectations at 2.8% on the year. IMF Managing Director Kristalina Georgieva gave CNBC her take on the impact of war in Iran.
All roads go into higher inflation, slower growth. But how much that would be depends on whether the ceasefire holds and turns into a durable peace, and how much is the infrastructure damage already done.
Well, let's get some thoughts on the markets with Christian Nolting, who is Global CIO at Deutsche Bank Private Bank. Christian, thank you so much for joining us again today. It has been a very big, fast-moving market, and that is across the globe and global equities. Just give us a sense as to what you think the markets are thinking about in terms of how much they reclaim back and what they're still cautious about.
Yeah, I think it's quite remarkable, right? I think the ceasefire was a really positive news. As you rightly just said, we have one of the best weeks behind us. And from that perspective, markets have not come back completely to their peak we have seen in February, but the mood is a more positive one. However, I would caution a little bit. I think looking at such a situation, you need to look at facts. And as you rightly say, the facts are saying Strait of Hormuz is not really open. And I think we need to see that from a market perspective, that we don't have, as we get inflation data today, an impact not only on the first round effects, but also then on second round effects, which would feed then from headline inflation into core inflation. I think that's a very critical point. If Strait of Hormuz opens now and we see prices coming down, that's a positive thing. If not, then I would also see some negative market reaction again.
And that is the challenge as central banks meet next week in Washington. They try to work out how much of the conflict remains a challenge for them from here. But when you look at the macro impact from a growth shock or an investment potential, how are you thinking that that is still going to have an impact across the course of 2026?
Yeah, I think unsurprisingly, it's a question of time, right? I think the 6 weeks we are seeing now, I think the impact on growth, if Strait of Hormuz opens here, we see lower energy prices. I think that's somehow digestible, maybe talk 0.1%, 0.2% growth. If it takes longer, I think then, of course, there's an impact. And then you would say, okay, what's the reaction function of the central banks, as you rightly say? So again, if we move from headline to core inflation, if we see higher impact on growth, then it's not so easy for the Fed to cut. And the market is not pricing no cut this year and then one cut next year. And I think that's what the central banks need to discuss. Is it, again, a transitory effect or not? And if I listen to central banks just recently, they want to act rather earlier this time as compared to COVID and maybe hike. So if you look for ECB, for example, and then being ready to cut again. So I think that's rather a reaction function of the central bank, but depends really a lot on duration of this conflict.
Christian, I don't want to age either of us, but you've been a great friend of this show for a very long time, and we've seen a lot, of course. What are your clients saying to you? That's what I really want to know. You've got some unbelievably high net worth individuals who are very smart, who have negotiated a lot of crises. What are the conversations like at the moment? I would imagine they're incredibly nervous, or are they seeing a great opportunity?
I think they are calm, let's put it this way. I don't see them very nervous. I think they are good position and look at market reaction. If I look at the year-to-date performance of S&P, it's down 0.3. If you look at Europe, it's up, not DAX, so slightly down, but that's more an idiosyncratic issue. I think they are okay, but they are not in the mood at this point in time to buy into the market, which I think makes sense from my point of view, because we need to see facts. That's what we also discuss with them. But I think we already see them to look at some sectors which I think could be much more interesting than before, because I can see them discussing a lot about solar energy infrastructure is a major topic. We have discussions about using EV cars much more than combustion engines. So you see a change there, especially on the discussion about energy, because you had the crisis in Russia, Ukraine. Now you have another energy crisis. I think everyone, every company, but also the clients are discussing heavily how to secure energy. And I think that's a very interesting investment topic as well. And I see them really moving in that direction already.
Yeah. But I see that as fraught with risk, Christian, for so many reasons. A, solar, because, dare I say it, a lot of the investments have been wrapped up by the Asian players, primarily China. B, you mentioned EV. Let's be honest about it. Buying into cheap European autos to get an EV exposure is a widowmaker of a trade. And in terms of energy infrastructure, it never got cheap. When I look at brilliant companies like Siemens Energy, they're not cheap. So I see fraught with risk at every stage there, Christian.
Yeah, they didn't get cheap, but I think there's more growth to come, right? Especially if you look at energy infrastructure. So I would rather invest into a growth story, which has not become cheap, I agree. But then I say, if I see further growth, I think that's still interesting. And I think if you look at the sector size, it can grow from my point of view. And maybe, yeah, if you look at autos, of course, then you really need to differentiate what's the strategy here. Yes, but there are some very cheap stocks, I would say. But then if you combine this EV and maybe some downbeaten stocks, that could be interesting down the road. Again, I think it's really interesting to see so much demand and discussion from clients about this topic. And I think that's the biggest change I see in discussions than before that war.
Christian, it's Ben here. I just want to sort of get your thoughts on what's happened in the markets in the last couple of days, because until now there seemed to be a pattern where if there were concerns about oil supply, oil price would go up, equities would go down. And just in the last couple of days, what seems to have happened is fewer ships actually passing through the Strait of Hormuz than in the fiercest days of fighting, despite the ceasefire. Oil has gone back up. It's creeping back up towards $100 a barrel. In fact, North Sea oil is, I think, 147 a barrel because of supply fears. And yet today, the Asian markets, the economies that are most reliant on energy imports, are up. What do you think is going on in the minds of market participants there?
Yeah, I think it's indeed quite interesting, right? You would say maybe that should be different. If you look at the future curve of oil, you see it's really heavily in backwardation, i.e. the short end is much higher than the longer end. So markets do really anticipate, and we can see that in the future curve, that this conflict doesn't last too long. And from that perspective, there's some relief, and you see that relief coming in if you talk about ceasefire. But that's also where I say let's remain cautious and just look at the facts. If the Strait of Hormuz doesn't open, then the market needs to reevaluate what's going on. And we will run, I think, at one point in time, which I don't see too far away, into really supply chain issues. And then the sentiment could really turn negative. The market, though, I think is very positive, and maybe that's also because of the now upcoming earnings season, where especially in the US, a lot of growth is expected. So the market is saying, okay, where are optimistic views? Where can we go? What's positive? But again, that's why I think we really need to look at the facts, and the sentiment can turn very quickly.
I mean, every weekend that has come and gone has been so consequential. Going into this one, sort of, how do you position ahead of Monday morning, not knowing which one of two directions things might go in, two very different directions?
Yeah, I think that's true every week. And now we have the negotiations, if they happen in Islamabad, we have elections in Hungary. So a lot of things to happen. We position a bit more neutral, to be very honest, because we see risks on the upside as well. We see risk on the downside. It's not so much on the equity allocation, and we are doing quite well with this one, is really to look at sectors where we do see, and that's why I mentioned longer term growth. And that creates a more robust portfolio instead of now betting on one direction. I think that's very important in such a high volatility from the geopolitical side.
Christian, something that's going to be in focus next week is going to be the dollar and the performance from here, because it's been such a strong trade during the conflict. And already there is a lot of discussion about the return to the type of dollar weakness that we had pre-conflict if the situation is sorted out. What do you think that means for portfolios? Do you agree that a dollar weakness scenario could be on the horizon?
Yeah, I think the dollar was a kind of textbook move, right? You normally would see there's a geopolitical event coming up. Normally you see US Treasury yields to come down. You see the dollar strengthening. We have not seen US Treasuries to come down on yields because of higher energy prices and inflation discussion. But we have seen the dollar strengthening. And yes, you need to buy energy still in dollar most of the time, at least, right? So there's some discussion about renminbi, of course, and Strait of Hormuz fees to be paid in crypto or renminbi. Of course, you see that. But I think in general, we would say if the conflict peters out, if that's the right word, you would see a weakening of the dollar, but not a collapse. Yes, there's some discussion about petrodollars. Is there a change? I've not seen that at this point in time. And so from that point of view, we don't need to change the dollar view. But the trend is rather weakening, not substantially fast, and not to levels that other central banks would need to act. If you, for example, get a too strong euro, of course, the ECB would say, do we need to do something? But the ECB is talking rather about hiking than cutting at this point in time.
Christian, lovely to hear from you and great to see you again, my friend, and have a wonderful weekend after another day's work, of course. Christian Nolting, who is Global CIO at Deutsche Bank Private Bank. China's President Xi says the country will not tolerate or condone the idea of Taiwanese independence. Xi made the comments at a meeting with the island's opposition leader, Cheng Li-wen, the first meeting of its kind in over a decade. China refuses to speak to Taiwan's elected president, describing him as a separatist. A lot of people sporadically refer to the Thucydides trap, which is an excellent pivotal work by Malcolm Allison. And in fact, someone this week was already referring to it on this channel. Ray Dalio refers to it quite a lot as well. It's a book I've read, and it's basically about the concern that a superpower has when another power becomes stronger as well. And it goes back to Thucydides and the Peloponnesian Wars, where we can learn a lot from history, where Athens was the rising power and Sparta was very terrified of it, hence the Peloponnesian Wars. And it's very relevant today because it's looking at how China has come up the rails, of course, as a global superpower, threatening the hegemony, depending how you want to say it, of the United States. With that in mind, of course, that brings us back to the ramifications of these twin wars we're seeing in Europe and the Middle East, whether it be Ukraine or indeed the Iran-US-Israeli war at the moment, and what that means for China's position over the area where it sees regional dominance as well, and brings us back to the thorny question of what happens over Taiwan. Well,
the war in Iran has really brought to the fore the problem with choke points. We have a choke point around oil, and the future choke point could be around semiconductors. And this is why we talk about Taipei, the relevance of it for the world economy. An enormous amount of semiconductors out of the country that simply cannot be replicated elsewhere is a major issue. And what we've been watching very closely, these conversations from the opposition leader who's reached out to China, what that means in terms of a bridge here, whether she's positioning to be some sort of replacement down the track, and whether this carries favour, not just with Beijing, but also in Washington in terms of smoothing over any relationship that is fraught between China and Taiwan. The other point raised here is that the Americans have been fairly active in Taiwan in recent days. Last week, for instance, they've been pushing Parliament to try and approve a $40 billion special defence budget. Trump over the years has indicated that perhaps there would be some sort of arrangement where the Taiwanese could pay the Americans for defence. for some sort of backstop. So I think moves are afoot to ensure that Taiwan has some form of independence. But of course, the Chinese are not going to be allowing that to happen very easily.
Yeah, and I think the other thing is, who would Taiwan look to for help in that sort of situation? And actually, a lot of the Western militaries have now got so many other commitments and arenas where they are engaged that, I mean, over the last couple of years, the number of times I mentioned warships and so on trying to prevent incursions by China further into the South China Sea, the territorial disputes over Spratly Islands and so on. And actually, if these other navies are engaged in conflicts elsewhere, you know, how much spare capacity is there to try and enforce the international rule of law? We will continue discussing that, and we'll also be discussing this because there's surging interest in data centres that's posing a challenge for the insurance industry. We'll dig into the details. Plus, Hungarian voters prepare to go to the polls in a very closely watched election. We'll tell you why. And we'll dig into the outlook for private credit with Sam Kemp, the CEO of Connection Capital. That interview's coming up at 9:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. The Treasury Secretary Scott Bessent and Fed Chair Jerome Powell convened a meeting of Wall Street leaders to raise concerns over the cyber risks from the latest Anthropic AI model. That's according to multiple reports which say banks were made aware of the possible risks from Anthropic's latest Mythos release and other potential future models, with officials reportedly urging the need to take precautions to defend critical systems. Anthropic is considering designing its own chips in response to a lack of AI chips needed to power and develop more advanced systems. This is according to Reuters, which says plans are in early stages, with the startup yet to commit to a specific design or assemble a team to work on the project.
A fascinating internal note issued this week. OpenAI has criticised Anthropic in a memo to investors, saying that it is, quote, operating on a meaningfully smaller curve. In the memo, which was viewed by CNBC, the ChatGPT maker argued that its main rival was constrained by compute, calling the approaches to compute by both companies different. And on that note, the boom in AI data centres is becoming a stress test for insurers, as the rapid development of the technology and the complex financial structures used to finance the centres are causing challenges, as well as opportunities for insurers. April joins us with more. April, tell us about the financing here in the backdrop.
Good morning. Yeah, so I wanted to do a deep dive into the financing of these huge, expensive assets for some time, because there's a lot to say. And so I spoke to insurance brokers who said that over the past couple of years, AI data centers are becoming a real sort of stress test for the sector, because traditionally they've just been handled as, real estate accounts. But as increasing power comes on site, they're having to take in insurance capacity to provide for things like microgrids. In the future could be SMRs as well. And then you have the kind of expensive equipment that these data centers house. So they're having to create dedicated teams where they enlist specialists across telecom, finance, cybersecurity, and power. But when you have sort of this high concentration of value, say, $20 billion all tied up in one location, and then particularly if it's in a sort of high wind hurricane zone, that can be quite tough for insurers to provide that capacity.
The conflict in the Middle East has raised some questions around data centers from a number of different angles. Number one, the attack on an Amazon data center, just what sort of security is required when you've got geopolitical considerations is one factor. The other point was, if there's a go slow approach in the industry for various different reasons around funding, what does that mean for the sector as well? So how do we think about that in terms of the financing rounds?
Yeah, and that's something that we've been tracking quite closely, speaking to some of these data center operators about how they're thinking about the Middle East. Because because for some time we've been building up to this area where, oh, this is definitely somewhere where we want to go. You know, there's high availability of land, there's a lot of money and investment, but now they're going to have to kind of potentially reconsider. But they do say that they still see this as an attractive location. But when you're thinking about insurance and the supply chain disruption as well, which I think is really interesting that this conflict has created, that has created issues and knock-on effects that will definitely continue for some time.
April, I inevitably come at everything from a cynical point of view, and I apologise to everyone for that. It's my modus operandi. Specialist insurance teams for a bit of it's just another building. It's no different from a nuclear power station. You mentioned SMRs there, or some complex piece of grid or manufacturing, what have you. Basically, I hear what you're saying, and yes, of course, they are becoming way more sophisticated as they move from being a piece of land to a fully functioning data centre. But isn't this just an excuse? I don't know. Again, my dear friends over at Lloyd's of London will probably balk at what I'm about to say, but just another excuse to kind of say, well, this is very complicated. We need to charge you more money.
I think I have to agree and disagree because, you know, obviously these insurers, they want to hop on the gravy train, right? You know, when I spoke to them, they mentioned these are AA plus locations that typically get advantageous pricing. So you can see why they're, you know, they want to provide cover here. But there are challenges that are rising as hyperscalers are increasingly tapping private infrastructure. The financing deals are getting more complicated. You're seeing asset-backed securitizations, GP secured loans. And for insurers, there's a lot of technical aspects there to handle. So they spoke to me and they said, you know, previously we go in as the specialist, but now we're actually having to listen to the data center operators to really understand what it is that we're providing capacity for, especially when you talk about sort of the life cycle mismatch with GPUs and how they're depreciating.
Sorry, you just
value.
said something. Well, you said many fantastic things, and I bow to you on all of this. But you just said something amazing. Are the insurers insuring against some of the levels of financing or the loss of some of the levels of financing potentially as well? Because we know there's a huge degree of opacity in whether a lot of these are going to get built because the financing now, especially on the back of the private credit demise as well, and the likes of Blue Owls with their problems with redemptions. Are they also insuring against the financing not being available for these sites?
I mean, there you're talking more about the banks and the lenders,
right.
And they are very much aware of some of the challenges that banks are facing. So say I spoke to Marsh Risk and they talked about how as these data center loans are increasing, the banks who provide, or the insurers who provide cover when a lender can't pay are starting to hit capacity limits. So they're trying to come up with solutions for that because, you know, they're working in tandem, say, with the banks on these deals, but it is the banks there who are, you know,
so
supporting
the banks have to understand. So the insurers are now learning more about credit default swaps as well, I guess.
Potentially, yeah.
It's funny, I thought the interesting part was the life cycle. And we'll come back to that around the GPUs because I was wondering what the life cycle of a data center is and how you actually price the asset based on it. But we will continue this later on the show. And for more on the topic, you can read April's article on CNBC.com.